Welcome to Commodities, and here we're looking at gold on the 4-hour chart. And as you know, we've been looking for a rally off these lows through to here, back to the 50 or 61.8% retracement level through here. Just want to point out that this little structure that we've actually got through here actually fits reasonably well as the A, the B, and the C. It counts internally. It counts correct, and finishing at this point through here. So technically, the market can move down from here. However, taking into consideration what's happening with the indices and so forth being weaker here, we may see a larger, more complicated correction here. We've got the US dollar index ready to bounce off 79.30 and retest 80. So we'll see a corrective rally in the US dollar. So it is likely that we'll see some sort of, maybe a little bit higher from here, but we'll see some sort of move back here. But I'm just wondering if we actually get a larger ABC correction before we move down through here. We either move straight down from here or we get something like this here. I'm just a little bit unsure, so we will need to wait until we get a quite a clean indication of what's actually going on through here. So what we've been doing here is, the 1, the 2, the 3, the 4, and the 5 for the A wave here, the ABC for the B wave, and the C wave here. So look, I guess the reality here is that the 1300 as a retested resistance would create a bearish bias, because we just need to be careful that we don't get something that's sort of a bit more complicated as such through here. So having a retested resistance, not to chase the breakout here, but the retest is more important, the reference point here. And then we'll also know too what sort of structure that we've got here. If we've got an impulse wave down through here, then we'll know we'll be getting an ABC and then down again as well. So let's just allow this to take its place. Of course, you can just short it here, but the risk is the risk is what it is. It's catching the turning points is not such a bad thing, but especially based on the US dollar here, it's definitely This is definitely moving into an over bought situation from this low here. But the momentum for this is still to the upside on the daily as well. So we just need to be a little bit careful and wait for some evidence to fall into play. The copper market here, just on the bigger picture here for the daily. We'd been working with this wave 4 here, and it may be complete, it may not. We'll go and have a bit of a look at that in a moment, but we're still staying with the larger picture here, and that's in blue, minute wave 1, minute wave 2, then 5 in the green section here for wave 3 here, then 4 and 5. So that's what we're looking at through here. It's just that wave 4 is taking its time, and while it's got support on trading level 3 here, major trading level, we can't call the top in just yet. But drilling in here, we also understood that yes, we do have support here, so we don't want to be shorting above the closest largest number, so to speak. And also we recognize that we've had a 3-wave swing here, so that means that we should take this level out through here. We know that we've got 5 waves up to this point here, and it may be just a truncated 5th wave here that's failed, and we'll see further weakness fall into play from this point here. But we also understand that this little 5 waves up through here, and then the A, the B, and the C here can just be like wave 1 here, and then we've got a little wave 2 here as such, and then we're moving up from there. So this is how that counts out. So the 1, 2, 3, 4, 5 to here is an impulse wave, the A, B, C here, and then this also looks impulsive here, and then we're looking for, this doesn't look impulsive here, this looks corrective here, but we'll give it some time. And look, essentially, as long as this market stays above this low here, I did say 103.02 because, it's just the pivot within group 1, 1, 2, and 3 here, and if the becomes the resistance through here, then it's weak at that point there. So but technically it's this low here that would need to be breached to call in a bear market. Otherwise, this is going to move up rather swiftly in the next session or two. So just be mindful of that. The oil market, well, we were counting this little blue section up here in 5 waves, and now we have 5 waves in play here in terms of little 1, 2, 3, 4, and 5 here for the 5th wave. There is a possibility that all of this can be corrective and it finishes just here and then moves down further here. But while it's above 103, the top of group 1, then I'd like to consider it being positive through here. I would only turn bearish if the 102 became the retested resistance from that point. So while that's the case, then the trend is still to the upside here. As with the gas market as well, the whole move up we've had in the gas market from the 420 support here is still in 3 waves, so it still can be counted as corrective rally in terms of an A and a B and a C wave ending in here, probably now-ish, really, probably in here, or one more little push up there. I haven't pulled this apart in here to have a look at this, but as it counts so far, we've got up for A or 1, back for B or 2, and then in the blue waves we've got 5 waves, the 1, the 2, the 3, the 4 and the 5. But I have to say, being so long, is more like a 3rd wave here rather than a C wave here. So I would consider this further to move to the upside. Yes, it can pull back to the 4th wave of 1 lesser degree before it moves up. We know that that it's overbought at this stage here, and this is the resistance here, the 65, 72 and the 80 here, all of group 2 here. So we will see corrective activity in this space here, but the daily momentum is still to the upside and can move higher up towards the $5. We have positions at 450 odd here, 453. So we'll just bring the stops up to 453. Probably really should be at 446 actually. But anyway, we've got to trade in. We've got it to break even. We'll just sit there for a while. If the 72 up here becomes the support, well then we'll look to add to that position there, and we'll be looking to get up to 90. But we want to see a bit more evidence that we will be heading higher. So we need a corrective pattern here that we understand, and then we can build from that corrective pattern, because that will be the foundation for the next trend. The grain markets, nothing really happening in those. In terms of the soybeans here, look, we can probably call in the 5th of the 5th of the 5th of the 3rd wave, minor wave 3 here. We're looking for minor wave 4. May not come back to this level here, but it is the 4th wave of 1 lesser degree here. Look, it's in corrective mode, so I'm not really going to give it a lot of attention from here on in. Because we just basically need to. I'm not particularly interested in trading a corrective wave 4. If it's a wave 2, not such a bad thing, but a wave 4 can get quite complicated. That's where double zigzags, triangles, all those sort of things, it becomes a real guessing game, and we don't want to be in that situation. We want to find another market and to trade as such. So the wheat market's the same as well. We're talking yesterday about it coming back down towards the 650 area, and perhaps even a bit lower than that. It looks like they're going to have a bit of rain on the Great Plains, and a bit of oversupply coming in, but it's weather and it's fickle, and we'll be looking for support in this region down here, and that will finish off our whole corrective structure to the downside here, and then we'll look for a buying opportunity when that comes. So that's not too far away. That's something. The corn market, it's same old story. It's had its 5 waves up through here, and now we're looking for the simple ABC across this level here. That's going to take a little while, and once it's done, then we'll be looking to trade to the upside. So we may even buy some, back in the 480 sort of area, 472 area, if it occurs, but very small positions, and we'd need to hold on to those for the longer term. The coffee, There's a couple of little counts here that can be into play. It's not that we're that interested in them just yet either. So on the daily chart from here, we'll look up for wave 1 and back for wave 2, all of the third wave up to the major trading level 2 here, wave 4 back 40%, and then it came down in 3 waves here, but I was wondering it's just a bit too simple for a 4th wave, but there you go, maybe that's the case. It's either that or we're going to see these are the 2 options. We'll either have 5 waves here, 1, 2, 3, 4, 5 here, taking out the top here, as such through here for wave 5 here. Then we'll have the A, the B, and the C here, and then we'll look for support here, and then we'll be trading long from there. So it's either that's 5th wave coming into play, or we've got wave 4 over here. This is wave A down to here. This is wave B coming into play here as such, and wave C coming into this area through here, and then we move up from that point there. So either way, it's, you know, like I mentioned before, it's not a big deal. So just allow it to unfold a bit further. The orange juice is going well, trade. So you know, we've been counting it from this current low here at the 146 area, the 1, the 2 in black, and then we've got 1, 2, and 1 and 2. So it's still feeding to the upside. So we're still in the 3rd wave here to the upside here, and it's not finished yet. So we'll see this blue wave 4 come back to the wave 4 here, 1 lesser degree, and then we'll see a move up. The other point with all this too is that this is the arrival of minor group 2, so 65, 72, and the 80 up here. Once we get support in group 2, then I know that we're going to be moving higher from that stage. I also know that we're, you know, overbought in this area here, so there's going to be some corrective, you know, wrangling going on, but the momentum is still to the upside. We'll still consider adding to positions as this market moves further up. So this is the active market at the moment. The sugar market here, I was just going over this from yesterday. We just brought this on board here, but look, all of this move down through here is corrective, right? We're just wondering if it's completed just yet. There's a chance that it's not completed and there'll be a move down to the 1650 level, which is the medium level. I know it didn't touch here, so there's obviously buying, you know, some support coming in here. But I was wondering this little pattern here as an A and a B and a C wave, and then moving further down. So we would only go long on the 1720. So if you get 1720 as a retested support, get a very small position, get another one on 1730, and then chill out, because we need to get to 1750 and support on that before we add to those positions. So anyway, we'll see how the US dollar just moving. We'll just go and have a look at the little US dollar here, because what we're looking at here in the US dollar, I haven't got all the count on this particular one here, but the main point is the 79.30 area here, 79. So in this area, so basically we're looking for a move down here, and then we're looking for an A and a B and a C bounce back up here. So in this bounce back up here, we're going to see the commodities weaken at that point. So we may see sugar test the 1650 at that point. So once this is over here, yeah, and once this is done here, then we'll see further downside down towards 77. And that's when we can look at the commodities to the upside, start adding to some of those as well, especially the ones that are sort of in sync with the financial side of it rather than the weather side of it. But they are supply and demand. But yeah, alrighty, well that's it. Thanks for listening.